Welcome, everybody, to a very special edition of Friday Drinks. Today's extra special because it's actually sponsored by Nyabadza. They decided to celebrate their 60th anniversary with us, and it's such a joy and such a pleasure, and we want to be part of this story. My little part to this story is that when you actually came up with the name NicozDiamond, I was a research associate with Gary Thompson and Associates, and it was... okay, there's a bit of feedback there, so it's confusing me a bit. But anyway, and they were deciding on the name. Okay. And I think it was a merger between Nikos and Diamond. Yeah, so that's the part I played, doing a bit of market research on what name and what the branding should be. But I'm glad it survived as long. Yeah. So we've got a special guest, the CEO of NicozDiamond, David Nyabadza. You may not know this, but he actually worked with my mom at some point. So I know my mom is watching the show. So yeah, but thank you very much for joining us.
Thank you, guys. Pleasure to be here.
Yeah, and so you are not drinking.
Well, I am drinking. I'm just not drinking alcohol.
Okay, all right. Yeah. Why? Because it's 60. It's your 60th anniversary. I thought we were going to be.
Oh, he's a teetotaler.
Well, I'm one of you. I'm a teetotaler, and I actually love tea. A good day for me is sitting, looking into the Vumba Valley with a cup of Tanganda tea. When you're in that situation, you've arrived. It doesn't matter what the rate is.
I tend to agree with the Tanganda tea, but today we're going to have Kericho Gold, and that's Kenyan tea. Yeah. It's lovely. It's divine. I think it's one of the best in Africa. And Comrade, what are you having?
Well, remember the friend of the show, Gloria, gave us a bunch of wine, a whole case. So this is one of the wines that she very generously gifted us. It's called Babylon's Peak, and that's what I'm going to be drinking today. You know, this weather, it's quite nippy. It's great for red wine, which you drink at room temperature.
And it's also great for tea.
Well, it's always great weather for tea. I've seen you drink tea on unbearably hot days, and you make the point that it helps with the heat.
Yeah, it's got a cooling effect.
Yeah, I've never quite been sold on that, but you know, to each his own, I guess.
Yeah. So, David, maybe to start off with, maybe tell us your story, because it's been quite a long journey for you to actually get here. So maybe we can start there. Just tell us a bit about your story, and then we'll get into the NicozDiamond story.
Okay, so maybe I'll talk about my story, about a little bit of history about me, and also about how I got to where I am here, sitting younger than 60, but celebrating 60 years for the brand. So maybe I can, for the purpose of your viewers, I can start by something that they know about First Mutual Holdings Limited, and then because that's something that they can invest in. I think, first of all, just to say that I don't know how many people know this, since demutualization, First Mutual Holdings has actually really transformed. We now have 14 different companies, and as a consequence of that, so for us to focus on the growth of the individual clusters, we organized ourselves into clusters. So there's the Life and Health cluster, which where the parent company, First Mutual Life, is situated together with the health business. There's the Reinsurance structure, which is a big part of my story, which is also now domiciled in Botswana. And then there's the General Insurance cluster organized under NicozDiamond, and we are here, and we are in Malawi, and we are in Mozambique, where we do have a subsidiary. And I am the cluster chief executive for those companies in the general insurance sector, and the managing director of NicozDiamond. So it's basically organized under NicozDiamond Insurance Limited. So for me, my story...
That makes you very powerful.
Well, to an extent, but I just know that there are people who are more powerful than me within the group. Mm-hmm. So in terms of my story, it's not a complicated story. I grew up in Rusape, at St. Francis of Assisi Mission. So our great-grandfather then broke away from the Anglican Church, way before the 30s and started a church. There were disagreements about how the gospel was being delivered to the black people. So that's where we grew up. And then I went to school in John Cowie Primary School in Rosape. It was a multiracial school then. In his wisdom, my dad decided, because I'm a January baby, to take me to school a year earlier so that I would not be the oldest in class. So I was the youngest in my class, and I think that shaped a lot of the way that I viewed the world, because I was in a class and everyone was mukoma, and then I would go and have sports with the kindergartens during class time and so on. So it was a bit complicated, but it helped me to deal with different dynamics, and when opportunities came, I could oscillate between whether I wanted to play like a baby or be a bigger guy. And then I moved to St. Augustine's St. Augustine's Secondary School in Penalonga. I think in those days, and this is now 1990, so I started grade 1 in 1984. And we moved to St. Augustine's in Penalonga. I think then those were the schools that everyone aspired to go to if you thought you were academically gifted. Kwatsambe, yes. And getting in there was not an easy thing to do. But I got there. I spent 4 years at St. Augustine's.
Did you pick up the smoking habit? Because everybody who went to St. Augustine's became a smoker.
I was lucky. So we got there just after Father Prosper had left. So Father Prosper encouraged people to be independent. When you got there, you would hardly think it was a school. Some people, you wore the jacket that you could find, because in his mind, education was supposed to not to be a burden on the parents. So it was inexpensive, but the flip side of it was that we did a lot of work as students. Okay. We worked in the gardens and so on and so forth. So anyway, so that's up to St. Augustine's. But I was always curious. I always wanted to explore new things, and I naturally get bored easily if I'm doing the same thing. So when it came to A-level, I decided to go to Kutama, and Kutama was trending then because of two things in the academic space: the Math Olympiad, they were doing very well, and then the quiz. You remember that program? I don't know if you remember that. I might not remember. So there was the National High Schools quiz, and Kutama was blowing it off. So I put as my first choice Kutama. And then I got into Kutama. This is 95, 96. They also had very good facilities compared to...
So it's got nothing to do with presidential aspirations.
Well, it's not too late. You never know. You never know. At least I've taken the correct
baptism.
the correct route. Yeah. So then I left Kutama, and that's we in 1996 now, and had to go to university now. And now this is where things got...
What was the change like from St. Augustine's to Kutama?
Okay, so I had very high hopes, but I think it was not as I expected. I think St. Augustine's was a family. There was a lot of humility. Kutama, maybe in part because the president was from Kutama, the boys really felt that we are Kutama, and so I
big egos.
Struggled. Yes, big egos. And we were seeing ministers, Chombo, and so on coming through. So this it was, yeah. So I sort of struggled to fit in, and then also we had learnt with girls. Now it was just boys, and you know how it can be. So it was, but we managed.
We don't know how it can be. Please explain.
Well, boys, it's about it's about
academic.
ego, and it's about academic who's best.
Better than.
So it was very competitive.
Okay.
Kutama was very competitive. St. Augustine's was competitive, but there was a little bit of humility about it in terms of how it was done. Okay. So anyway, 1997, we have to go to a school. So this is the first time I really had a fight with my dad. My dad wanted me to be a doctor. I never thought it was in me, so I applied to NAST I applied for actuarial science to do actuarial science at NAST. NAST was opening in August and UZ earlier, so yeah, it was very tense in the house. But eventually, I get to Bulawayo, get on the train, And NAST then was just, it was a university in name and in IP, but there was nothing. So so you get there, they tell you to go.
Sounds like MSU.
They tell you to go and find somewhere to live. So I think I got some, but it was organized. The people who wanted guys to lodge would bring in their proposals. So the dean of students, who was based in town, would then give us, go and search here and there, you've got your pocket. So we went, and I got a house in Queen's Park.
So let's just circle back to the disagreement you had with your father.
Yeah.
Why were you headstrong? What do you think it was that made you so headstrong and so set in your ways?
Yes, I couldn't handle things like blood and so on. The thing and the pressure of medicine. So when you get to upper six, everyone is just talking about Bichimbi, about getting into UZ. But I think I just felt it wasn't in me. I don't think I could deal with the fallout of losing a patient, for example. I thought that it would be too huge for me to carry on my conscience.
So why actuarial science and not other fields?
So I was good in numbers. So if you, well, I keep saying if you recall, in those times you had to look for something that gave you the best chance of getting a job. Actuarial science, it was guaranteed. I think we had then actuaries who you could count on your hands. We do, yeah, and we knew them by name. So I thought that if I made it in actuarial science, then definitely the big money will come. I might move my parents from Rosapia to Harare. So I get there. So no, before I actually get there, surprise, the offer comes. It's not for actuarial science. It's for insurance and risk. So now we have a real problem in the house.
Do you even know what insurance and risk was?
I didn't. So this is the story. So I tell my dad, look, so this is what has happened, but don't worry about it. When I get there, I'll fix it. Because the first year, it's a BCom degree. The first year, the programs are similar. So if I in my mind, I'll go and see the chairman. It's the same department. Because I had not even put insurance as my second choice. My second choice was engineering, chemical engineering. So I said, look, if I can't do actuarial science, I'll do engineering, and then we'll take it from there. So I get to NAST. I go and see the chairman. The chairman is Mr. Chuma. Incidentally, he's an alumni for NicozDiamond from the Nicoz side. He was handling the region. Okay. So I go and see the guy. I think the offices were a trade center. NAST was all over the place. So I go to him. In the exuberance of youth, I tell him, I think there's been a mistake. I'm supposed to I applied for actuarial science, I didn't get it, and I didn't get my second choice either. I never put this program that you've given me. So Mr. Henry Chuma looks at me, he wore glasses, and he says, young man, you are lucky to be to be here. Take what we have given you. And then I think he then sees that this has really crushed me, so he starts telling me, no, it's actually a good program. He explains to me what insurance is about. And I think the good thing about insurance is it's visible. So he's telling me these are the guys building Kolomanimo, then the insurance industry, they've built Westgate and Eastgate and so on. And I say, maybe there's a future in this industry. Wow. So I go to school, I get down to work. So I'm there for...
so that was your first interaction with insurance?
With insurance, yes. I actually got to know about insurance.
Okay. But then that really shows your ability or your inclination towards curiosity, that it just took that one sitting with the chairman, and that was enough for you to actually get into it.
Yeah, you could look at it like that, but also I was not going to go back home and say that I'm not in school. Maybe I'll wait for next year.
Yeah.
So anyway, I do. It was a blast. I think lots of things happened. There's a chapter about what happened in Bulawayo, but obviously some of it not for an afternoon program.
on Friday drinks.
Like this one. Yeah, maybe for Friday drinks, but later. But anyway, so I go to NAST. I do my 2 years. Then I come for attachment. I think this is where I met. I worked with your mom at Southern Africa Reinsurance. Then now FBC Re. It was acquired by FBC Re. So I do a good shift there. There was lots to do because I think that was when we got into 2000 and the Y2K issues. So I did a lot. Work ethic was never a problem for us because we were working at St. Augustine's, we were working at Kutama. So I did long hours, put in my all, and I think I was the first student that they had from NAST because the insurance degree was just beginning to gain prominence. A lot of the people in the industry had come through other qualifications, and then they would do the professional qualification. So I do a good job, and then the CEO, then a very graceful man, gracious man, Mr. Chris Gomwe, says to me, "No, you've done a good job." And then I think I'm back in school three months, and then he says, "Look, there is a position that has opened. We'll hold it for you until you finish school." So the pressure is on me to finish and pass. So I finish school, I just get off the train and go to work. So that's how I got.
And your dad at this time?
My dad is late, unfortunately.
Right,
so he passed on during when
while you were at university.
Yeah.
What was that like?
It was difficult because I'm the oldest boy in our family, so all of a sudden you have to grow up. But I think we also come from a very big family, the Nyabadza family, and the support was tremendous. I think all of my siblings went through school. They just distributed us among my father's brothers, took care of us, took us to school. I think my sister was even taken as far as Australia, so it was very good. So I felt that I had lost a dad, and I felt that the sacrifices he had made, I would never get a chance to repay him. But we never really got shaken, to say the least. So I finished school. I come back. There's obviously the adjustment. You now have to stay with your uncle again. You now have hours, but yeah, it's part of it. So I worked for Sari for a couple of years, and then Chris says to me again, I have to say Mr. Gomwe, he's late as well. So Mr. Gomwe says to me, you're on a very good trajectory. This is after working a couple of years. I've got an assignment for you. I want you to go and open a branch in Bulawayo. The managing director for FBC Re at the moment, Kleto Chiketsani, is supportive. He signs off, and I'm off to Bulawayo. So now I'm a manager, and I'm back in Bulawayo, but a little bit more economically empowered. So the party starts again.
Your party's on Mondays.
So I work, but I immediately realized after a couple of months that I might get stuck in Bulawayo, because when you're in a branch, sometimes you get forgotten. So I start thinking about how I can come back to Harare. But now, because I'm
so just back up a little bit, because this is reinsurance. Why would a reinsurance company have a branch in Bulawayo?
Good question. So Zimri then was there. They had an office there. But remember, Bulawayo is an industrial hub then. And there's a lot that is going on. There are big companies there. And part of the business of those big risks needs reinsurance. So it's an attempt to get closer to the client.
Okay.
And so by that time, remember, we've taken the farms. So the values are changing very rapidly. So they look.
I like the we have taken the farms.
I don't know who we is in this context, but yes. Some people were disenfranchised. Yes.
So land reform has happened, and then so the values are moving rather rapidly. So the insurance companies have not yet adjusted. So it means that a lot of it is going into the reinsurance market. So it looks like there's a lot more work then.
Okay.
But with hindsight, obviously, a lot of it is inflationary. So I go to Bulawayo. I successfully opened the office. It wasn't very complicated. All of the back office support was in Harare. So an opportunity comes up. First Mutual now is demutualizing. And as part of that demutualization, they are opening new businesses. So First Mutual Reinsurance is formed. So in Zimbabwe, we used to have all of the big reinsurance players, your Munich Re's, your Swiss Re's, your Alandia Re's. And then when they saw that the things were going south, all of them started making for the exit. And
maybe
so
for our viewers, just explain what reinsurance is.
Okay.
Compared to insurance.
Okay. Yeah. No. Yeah. So the insurance companies take risks, but as you may imagine, the balance sheet of the insurance companies in a general insurance companies cannot support the liabilities that they take on. So some of the biggest insurers, so of which we are one of, would have typically now balance sheets between 30-50 million in Zimbabwe, but we are taking on liabilities that are many times that. So if you're looking at the assets at Zimplatz alone, or what is it? Delta. Yeah, it's a lot. So you then take that risk, you take what you can retain on your balance sheet, and then you pass on to the reinsurers. The reinsurers pass on to the next level of reinsurers, retrocessionaires now, and so on and so forth. Because the premium.
And this is usually
thin.
Abroad, right?
Yeah, it gets spread across the world. So that's
where Lloyd's comes in.
The Lloyd's of this world, the Munich Re's, the Swiss Re's, and so on. So it's a nice business, because every time you say I work in reinsurance, that's the next question: what do reinsurers do? And then you say we insure the insurance companies. So it's good if you're a guy, if you're a bachelor, and so on. So
sophisticated.
Yeah.
There's something that I've always been curious about regarding the insurance sector. You know, when you look at the big players in Zim, like NicozDiamond and the group FML, and your competitors like Old Mutual. And if you zoom out and you think about it on a global scale, one of the most successful businesses in the world is Berkshire Hathaway, right?
Yes,
and at the core of Berkshire is insurance, and he takes all these premiums, and then he deploys the capital in these other investments, and that's how he's created this tremendous amount of value. I think Berkshire Hathaway is now worth almost $1 trillion, but I haven't seen that model in the insurance world replicated anywhere else, and I've always been curious why.
No, it's actually what happens, right? Because there are two sources of income: underwriting and investments.
So one of the biggest, in a functional economy, one of the biggest creators of capital is actually the insurance market, because the business model is the risk management part, where you make sure that your premiums are enough to pay you for your claims and give you the profit. But the bigger part, especially if you've been around for a long time, is actually the asset management part. So the balance sheet keeps growing and growing and growing, and you are investing these funds. So you are right. Instead of you taking money and buying Delta, you can buy into FML and trust that they don't spend all of it, and then they invest it. So you get the return on the core business and the return on the asset management. But obviously there are other issues that have happened in Zimbabwe, and hopefully we'll get a chance to talk about them. Yeah. So anyway, I go to Bulawayo. There's this opportunity, so I come back for an interview at First Mutual, and I get the job. I think I was fortunate because I was 24 then. I was fortunate then that the guys who were running FML then were also not too old, into their 40s. 39, Doug, Norman, Sachikonye, No, BT. Yeah, very gung-ho. They've done this deal. They've done Capital Alliance. They're owning 20%. So everyone is ready to go. And I say, this is the right, this is the right team. We're going to make money.
So you've been there for a minute, yeah.
So they were able to accept that these young guys can actually come and start a business and give ZHL. Zimri then was the target, because all these other guys had left. So we said we are going to go for market share. We want to grow, and we want to compete toe-to-toe with Zimri, because we've got a strong shareholder. So we go in, we were bringing plurality to the market. And in the first year, we actually take 7, this is 2024 now, 7 of the treaties on the market, 2004, yes. Yeah. And it causes such a big noise, because they had never been this challenged, because most of these other companies, the people who were leading them,
so you're gonna have to dumb it down. What's a treaty?
Okay, so sorry about that. So the treaty, the reinsurance arrangements are in the main what you spoke about, that you make an arrangement at the beginning of the year, you agree which risks can be ceded to the reinsurers and at what terms, and then the insurer does their job. But then you also have the facultative bit, where the risks that are outside that arrangement, you have to now talk to the reinsurers on a risk by risk basis. They can accept, they can decline, or they can negotiate. So that's the main difference. The treaty is just an agreement upfront, automatic capacity to the insurance company, and then they can now go and quote for Delta. They don't have to say, we'll give you a price tomorrow because they already have the backing. So so it's a big deal. The treaty is the main in a normal economy. So we get that, and everyone we are happy. So that's how I got there. I was handling the facultative side. I was the youngest on that team, and unfortunately for me, a lot of the guys have also come from Sare. So Mr. Gomwe is very unhappy because when
you've been poaching stuff.
Was looking for a system, he went to Mr. Gomwe and said, "Show me your system." And then he showed the system, and then the IT manager, the treaties manager, myself. We all come there. He's technical accountant. We all come to First Mutual. So he was not very happy about that. But anyway, it's the business. So we worked there. We started very successfully, and then obviously we hit the rocks. The capital alliance issues are now coming to the fore, and you know our business. It's a trust business. People have to know that they want to be paid. I remember we went for a meeting with Mr. One of the MDs, Heritage Insurance, then a white gentleman called Bruce Aitken, and we are trying to tell him, no, don't worry, everything is fine. Then he just pulls out the Herald. Right on the top. FML suspended from the ZSE. So, yes, but we have to deal with it. But it taught us a lot.
How did you handle it?
It taught us, well, we were young, so I think we felt we had nothing to lose. If this fails, we look for the next job, or we go to South Africa where everyone was going. In fact, that was one of the risks. I think there was a disagreement to say, do we give these guys a job because everyone is leaving for South Africa? They come here for a couple of months and then they leave. But anyway, we handle it. We engage the market, and I think, to be fair, in spite of the problems, people believe that FML will get through it because it's a legacy brand. It's been around for nearly 100 years. So we deal with that, and we think things have stabilized. There are some concessions that have to be made. The CEO leaves, Doug takes over, and we are thinking business is going on as usual. Then Renaissance come through. Some more changes. So it was turbulent.
Tumultuous. I remember those days. Yeah,
but exciting for a young
man. So we are going into the market, explaining and so on and so forth. So we worked through Renaissance, and when the Renaissance team come, and it's Afri Corporation now, they've got a different view. First Mutual is born out of a mutual society, so things are done together. These guys come and they say every subsidiary must wash its own face. So you go there, you go there, you go there. So we moved to town.
Let's just stop a bit, because I think that was a very informative time in our lives, and it's very important, especially for our youngsters and for everybody also, just to understand what demutualization was all about. Because it changed the whole game around insurance companies. So why were they started as mutual companies, and why did they actually demutualize?
Okay, so a mutual company means exactly that. It is owned by its members. So there's a management team that runs. Society. Yes. So the members the members make decisions. There's a board. Obviously, there are governance structures, but the members basically own this. But now, by demutualizing, you're turning it into a proper company, and you're giving the members shares into the company, which they can now buy and sell, and then First Mutual then went on to list, as you would know. So that's the fundamental difference, and I think then it was felt that it would create more value. Old Mutual had done it, and I think a lot of people were happy with those shares, if you remember. Yeah. So we First Mutual Limited then also did it, and then at the same time listed on the stock exchange and brought in trust. If you remember.
Let's just go for a break, but I'm quite interested to actually understand, was there any value creation now, 20 years later? Let's look at if they had remained as mutual companies, and by demutualization, was the actual value created? But let's take a break. This is quite riveting and enjoyable.
Thank you.
Welcome again to a special edition of Friday Drinks, where we are actually celebrating NicozDiamond on their 60th anniversary. And we've got the man, David, and he's just walking through his career and some of the key events that happened at the time. And before the break, we were just talking about demutualization and mutualization and what is actually better. With the benefit of hindsight, we can actually be counterfactual and say, were Zimbabweans better off demutualizing, or should we have remained mutualized? What's your perspective when you just look back and you see what actually happened, without having to personalize but just to think around, what actually happened there?
Yeah, so I believe to an extent, and Rufaro may not agree with me, in the market. So I think that the mutual societies would have struggled to compete with what happened. There was less accountability in terms. There was no shareholder to say to drive value. And then we also, I think a lot of the business development that happened with the mutual companies post demutualization may not have happened. So that's my view. It's difficult in our case. Would need more cases to really look at, because the numbers got very distorted. But certainly when I look at First Mutual, it would never have gone into health insurance or reinsurance. It would have just remained a life company. And when I look at the contribution of the life business now, they might not. It would not have diversified to immunize itself against a single party. The policyholders, I don't know. Maybe they could have been better. They would definitely have lost value, because it's the same assets they will have invested in, but would not have the unending debate about shareholder assets and policyholder assets. But I think overall, I think that it's more positive.
Let's hear from Rufaro.
So I'm quite curious.
Let's talk about mutualization and demutualization.
Look, I think
are we better off?
I think private companies just are much more aggressive and entrepreneurial than mutual societies. Just like from a DNA perspective. So in a universe in which you've got some companies operating as mutual societies competing against other companies that are private, I think that the private companies would eat the mutual society's lunch. So I think my view is it was the correct move to mutualize. But what I'm curious about, especially around that era, is if you think about the great entrepreneurial projects that happened around about that time. So one of the material funders of Econet, for example, was FML. FML was also made possible. A lot of the successful, for that season, indigenous banks, Trust, Interfin, NMB, all of these guys benefited significantly from capital from the FMLs of this world,
or fixed deposits, actually.
Yeah,
investments.
I mean, FML today has been incredibly successful as an entrepreneurial group in its own right. I mean, they built that health business from scratch. But we don't see, and I'm not targeting FML in particular here. I'm just talking about the insurance sector as a whole. We don't see the capital allocation going to ambitious entrepreneurs like we saw during that time, where you were happy to take on this risk of some guy saying, look, I want to build a bank to take on these legacy banks like Barclays and Stanchart.
A business plan and a briefcase.
Exactly, right? And they built these banks, and they took market share, and they created all this value, and they actually got so big that they were in a position like, Renaissance to take over FML for a minute, right? So my question is, what's changed in the worldview of the insurance sector, where perhaps you're shunning the entrepreneur, or you're not as excited as you were at that time to back these guys with big ideas and no capital?
Okay, so I'm obviously not the most competent person to answer this, but I think for me, in very short, I think a lot of people cannot really wrap their heads around the amount of value destruction that happened these were big funds, so they could if they allocated 5% of their balance sheet in today's terms, this would run into tens of millions, and it was enough if you are a startup. But now I don't know from the life side, but like I was telling you, the entire short-term insurance industry is just about 400 million. Total capital for the entire short-term insurance industry. And that's not a lot of money for the risks that we are carrying. So I would say that there are capacity constraints all around, in my view. And we hope that the economy will recover enough, actually much faster than it is doing, to make sure that we create that capacity again. When I got to school, like I was telling you, there were so many projects happening that at the same time, where Nkulumani was being built, Westgate, I think, had just been completed, and so on and so forth. That's the level of capacity that was there. But now it makes news if there's a project, the president has to go and open it.
Okay. All right. So let's walk through. 2004 has happened. Yeah. What's now happening in your career?
So 2004 has happened. So I'm still at First Mutual Reinsurance. One of the big things that we also did in 2008 when things got very difficult was we just decided that we are going to die if we remain in Zimbabwe. So we go to and apply for a license in Botswana. There were no reinsurers there. And it was very counterintuitive because we were getting smaller here, and then so we opened FMRE Botswana as a business, and then while I'm it starts running, and then while I'm there and everything looks rosy. We are now into 2015. Doug says to me, "Okay, we need the TriStar is not doing very well. We need you to go to TriStar to deal with the issues there." So I leave. I was now in the operations executive at FMRE. So I move to TriStar. So that's how I come into the direct, the general insurance market. TriStar is the business for First Mutual in the general insurance space, but I think the feeling is that it's punching well below its weight, and so I get there, and then we work through it, we stabilize it, and then the NicozDiamond opportunity comes up. So First Mutual, long story short, First Mutual Holdings acquires NicozDiamond, and then I'm sent to NicozDiamond.
What was the motivation? Why acquire?
Okay, so like I said, so at shareholder levels, at shareholder level, because the common shareholder in First Mutual Holdings and NicozDiamond was NASA, and so at shareholder level, there were always questions to say, should our investments be competing and sitting in different places? Isn't it more efficient to put the insurance companies together, the banks together, and so on? So that's then that triggered that transaction, and then so in it started around 2017 the discussions, and then in 2019 I go to NicozDiamond. I take over there, do the integration.
What was that like? Because now you're taking over, you're the boss.
It's a different culture.
What was that like?
So it was a difficult.
And you're taking over from a luminary, right? Like Grace had been there for quite a while, and
almost 20 years.
Yeah. Mm-hmm.
Yeah, so it was a bit of a challenge because it was not just Nicoz and TriStar Insurance. It was Nicoz and TriStar, and then integrating them into First Mutual Holdings Limited. So TriStar itself had not quite fit into the group because it was a product of a partnership or a shareholding of Beverly Trust and First Mutual. So they are not quite a group company. They've got their own way. So there's a TriStar culture there that the group is trying to fit into First Mutual Holdings, and then now there's Nicoz. So we have to bring those two together, and then we have to try to make them work into First Mutual. I think what helped was that we were very clear, because this had taken a long time. We were very clear about what we wanted to achieve. So we focused. The why was very clear. So we focused on that. What we also agreed was to say this the confidence that the clients had in NicozDiamond must not be disturbed as much as possible. So we went there. 2019 helped us because we had done another gauge 1-to-1. So it was not expensive. So it was easy for us to make a decision that...
Don't tell the NicozDiamond shareholders.
So it was easy for us to say that we can actually carry on some slack. Let's not get there and then just do a rationalization. Let's see who wants to stay, who can fit into our culture, and who we can work with. So we do that, and but also because it had taken time, we had frozen taking on new people when people were leaving, and the new people coming in were graduate trainees. So we managed to put the businesses together. We also had a common system at NicozDiamond, the IT system at NicozDiamond and TriStar, so that was easy. I took the group shared services, integrated into First Mutual Group shared services. And then we started having
So you just started a new culture altogether.
A new culture, yes.
New people.
Yes.
Maybe at this point, let's actually talk about NicozDiamond.
Yeah.
Let's give us a bit of history. Where's NicozDiamond actually coming? So this is, you've explained how you come into the story.
Into the story, yes.
But let's talk about the NicozDiamond story. Where is NicozDiamond coming from? 60 years ago?
Yeah. So NicozDiamond obviously is at this stage is already a market leader, a big company, a renowned brand within the insurance space. It has come through a lot of transactions itself. The predecessor companies, NEM, Pearl, then NicozDiamond, which you were a part of, and then now it's NicozDiamond, and now it's coming into TriStar. But I think NicozDiamond had done reasonably well at that stage. There had been a couple of changes in shareholding which led to this, because NASA was not always a big.
Yeah, it used to be a subsidiary of Zimbabwe.
Yes, it was in the ZHL stable. So I think that is what then precipitated the chain of events that then led to Nicoz coming into First Mutual Holdings Limited. It had already gone into the region. I think it had done Uganda, Diamond. It had done Zambia, Mozambique, and Malawi then, with different success.
Yeah, let's talk about the
stories.
successes and the failures in the region.
Okay, so the region is a very tricky place to operate. I think the first thing is that we all like foreign direct investments. We want people to invest into our countries. But now when the people are here, we now start viewing them as foreigners. So there's a very strong nuance or what do they call xenophobic. It's different for different countries. It's different. I think the only country where we never experienced that was in Botswana. But everything else, some of the rules are tilted against the locals. So that's the first challenge. Then the next challenge is that the cultures are different, and what works in Zimbabwe might not work in the region. So again, you have to make sure that as you go into the region, you have done your research and you know exactly what you are going to do. I think what Zimbabwe has in the insurance industry is the skills. But in terms of some of the strategic assets that you need, you have to work with the locals. It's inevitable. So for us, I think in terms of our own regional program, we have we really try to work with significant and credible local companies to come in and invest in our businesses. So if it becomes a political issue or an issue that has to be dealt with, then they handle that.
Okay.
Yeah.
All right. And then now let's focus on NicozDiamond, the actual business.
Yeah.
What exactly do you do?
So I'm in terms of, so we are a general insurance. The business is
what does that actually
insurance.
mean?
It does short-term.
And how do I interact with you as a customer?
Okay.
When do I see NicozDiamond?
Okay, so we are a short-term insurance business. So by short-term, we write the products that are of a short-term nature, your property risks, your liability risks, generally policies of 12 months or less, and non-life in nature. Just
so car insurance,
vehicles, houses, machinery,
my glasses.
your glasses.
Will you insure my cell phone?
Personal effects.
Yeah.
Not yours, but we might insure other.
It is part of
yeah,
household,
but it's
right?
part of the personal effects. So
Okay.
Those are the things that are covered by NicozDiamond. So we operate through the corporate business, mainly through the brokers, because there's a lot of more technical expertise required and advice on the part of the client. And then we all, on the retail business, is direct through our own agents or through the other channels like online. And we've invested quite a bit in terms of trying to get to.
So I can pick up on Instagram, and I can.
Yes, you can go on one of our pages, and then you can it will take you through.
Okay, interesting. And then, so if I now have insurance, what does that actually mean for me as a customer? So I've bought this 12-month insurance and I'm paying my premiums.
Yes.
Then I lose my glasses.
So if you lose your glasses in terms of, and you have not breached any of the contract terms, then we indemnify you. You buy your new glasses and life goes on for you.
How long does that take?
Okay.
From the time I actually lose my glasses, because now I need immediate glasses because these are the only pay I have. And,
okay, so it depends. So there are different types of insurance. It depends with the level of assessment that is required. So if it's a big fire, it may take a long time for us to actually assess what happens, was it covered, quantify, and then eventually agree that we are liable, and then we pay. But if it's a small claim, I think it's something that can be done within 24 hours. In fact, some of the smaller issues like windscreen damage and so on, our brokers or some of the service providers can authorize that because there's nothing technical about that. Yeah.
Do people actually know that you can insure your glasses?
That's a big problem for the insurance industry at large. People don't know. Insurance has remained something that is sold and not bought. So we actually have to invest a lot in making people aware of the covers that they have. Even the covers that people buy, sometimes they don't understand it. I think you may have come across a lot of people with third-party insurance, but they think that they are covered comprehensively. So I think it's a...
What's the difference between comprehensive and third-party, especially with the vehicles? Because by law, we have to buy the
Insurance, yeah.
Well, third-party.
At a minimum, yeah.
Yeah.
So third party basically covers the people that you can cause an accident on, and then the comprehensive cover covers your vehicle and then those people. I think if just to simplify it. So it does all cover the own damage, but in terms of the law, you can't drive a vehicle if you don't have that minimum cover for the third parties that you can interact with.
So outside of the motor industry, short-term insurance, it's apparently, according to IPEC 2023 annual report, only 1.6% of Zimbabweans hold short-term insurance outside of motor vehicles.
Yeah. So there's lots of headroom. It seems like, and one of the questions I was going to ask is because we had this step change or this traumatic experience 2007, 2008 on the life side, on the pension side, where people lost tremendous amount of value. But I think on the shorter term insurance side, as long as you're current, if you have a claim, it's paid. I don't think there is that trauma on the short term side. People haven't had awful experiences where they were paid up and then they lose something or have an accident or fire or whatever, and the insurer says, look, sorry, you're now only covered for 1% of the value of 5. So why do you think that is?
The penetration rate is
the penetration rate is so low, but there hasn't been trauma really in short-term insurance.
Okay, so I think it's about priorities, about affordability. So Zimbabwe was built on a base that really understood insurance. When you go back to 1996, because these are the numbers that we were using for the research projects that we did, our premium for the market was over $500 million. And that's a lot of money then.
US dollars.
1996 USD for the total market.
Really?
And bigger than Kenya.
Wow.
In 1996.
In 1996. Right now, Kenya is on 3.2 billion. Okay.
And where's Zimbabwe?
We are now smaller than, so you can imagine where Zimbabwe could be. Zimbabwe now 270 on the short term. The life is now smaller, and that's telling. And then
so we're now in US dollars. We're worse off than we were in 1996.
No. That was the total. So there's a little complication though about Zimbabwe, because the medical insurance is outside the purview of IPEC, so we don't really get those stats. But there's a lot of premium that is generated there as well. Okay. So if you bring that in, we'll probably get close to about $1 billion. The entire market, short term, medical, and life. But it's still nothing. When you look at where we started, we should be way ahead of that.
All right. Okay.
Yeah.
Oh, interesting. Okay, so, and then what do we need to do to sell more, or what's NicozDiamond doing to sell more insurance, short-term insurance, especially now with the informal market?
Yeah.
We've seen a big chunk of our market is now informal market. What are you guys doing, and what can we do?
Okay, so that's the conversation now. The traditional insurance model is built, it does well where where you have formalization, because there are two things that need to be easy. It must, on the retail side especially, it must be easy to sign up, and then it must also be easy to pay the premium, because that's where the crux is. The insurance contract is activated by the payment of premium. So in South Africa and in Namibia, which is also a lot formalized, you find that the penetration rates are over the roof, because it's easy to collect. Someone signs on a debit order for life, and then that money is just taken, and you just find out on the first how much is left for you to spend with your family. So unless we crack those two in terms of how to get to the market, to this emerging market, the informal sector, and how to collect premiums consistently. Because imagine if, well, you guys are entrepreneurs. For us, imagine if we were given our pay and then asked to go and pay Zimra. It would not happen. We would be in prison. So
speak for yourself. Speak for yourself, David.
So we need to reduce the pain of payments, and we are encouraged because we now have the fintechs that are coming through. I think some, if you're on the Econet Life, when once money hits, it goes to pay the premium. So there's good, but we don't have that on the short term. And then also I think there's still competition on the wallets. So I was talking to one of the most successful wallets that has come through, and they are not keen to have debit orders on because they feel that if that is there, then the guy will go and use his competitor, because they don't want, when the money comes, for premiums to be done. But I think we'll get there. So we need to hope that, and obviously government has a role. If it's going to be expensive to keep money in the bank, no one is going to keep money in the bank. So that's that. But on the distribution side, getting to the market, I think we've tried our best as NicozDiamond. We probably have the widest distribution network. You'll find us, if you may have noticed, in service stations, in supermarkets, in post offices, and we've got a wide branch network just to try to get closer to the market. We now even have a mobile van that goes to sell insurance. That is mobile. You can sometimes you meet it on roadblocks, assisting police with enforcement, because you are not going to leave before you buy insurance, and you move on the Diamond Insurance vehicle. So I think those are the big issues. How do we distribute the products into the informal sector, and then how do we collect the premium?
In 2022, a Consumer Council of Zimbabwe survey found that over 65% of complaints in the insurance sector were about delayed and denied claims, pure communication, and endless paperwork to discourage claimants. What's the experience now? And is NicozDiamond better than what we're finding in the general insurance market? Because your customers are complaining about this.
Yeah, I think that's a big that's a big issue in the industry. But I think that the regulator has done a bit to deal with that in terms of giving proper guidance about the expectations in terms of claims turnaround in the first instance, and also reporting. So in every IPEC report, there is a report, a whole section about complaints for clients to go, and then we also now have a treating customers fairly framework, which we have adopted for our companies. So I think that we are seeing an improvement in that space, and I'm hoping that it will continue to get better.
Is this a very good reason why you should use a broker?
Well, they still have to come to the same insurance company, but I suppose if you use a broker, then Munyai can assist you to deal with the issues. And when your claim has been denied, they can also explain to you what has happened to you. Because I think some of the complaints go to IPEC because people don't understand why their claim has been denied, and they feel that IPEC can enforce.
Right. For NicozDiamond in the next 5-10 years, maybe let's start with the insurance market, and then for NicozDiamond, what are you guys seeing in the next 5-10 years? And what are the exciting things that you guys are going to come up with?
Okay, so I think for us is let me start with NicozDiamond. I think for us as NicozDiamond, our view is that we are a champion here at home, tried and tested brand. We've been in the market for a long time and people know us. I think it's time now that we really take that and become champions in the region as well. So we've got a very strong regional agenda to go into the region and form strong businesses there. So we've just taken over Diamond Seguros in Mozambique, which used to be an associate. And now we've also added health products on it. And we are in Malawi. Malawi is an associate company for us. And there are a couple of other markets that we are looking at to go into. So we think that a lot of growth will come from that, because I think it's important for us to diversify and go into those markets. These African markets, they are going through, they are vulnerable. So one day it's doing well, the next day it's not. So it's better when you're in different markets. I think it kind of diversifies your risk and you're able to post more stable results. And then in terms of the delivery, we know what is very insightful, and you guys would know this better than me. The companies that are said to be doing well in Zimbabwe are the ones that have managed to penetrate the informal sector. So your Deltas, your Inscos, your Simbisas, they are selling to the Korokozas and so on and so forth. So the insurance industry is behind on that. So for us, it's a key matter for us in terms of products. So we've got micro products that we've developed for that sector. And then we are also trying to invest more into the distribution on tech, but also on physical, because some of them, because you need to explain, we need to be able to engage more. So we will be spending more on that. We might have to put containers if we have to and so on. But we'll definitely try to get to the market and be able to get a share of that market. And then obviously digitalization is a big issue for us. We're in the process of putting now a system, and we've had to go and get the system in Kenya, because I think that is where these guys have really rode on and managed to tap into the informal sector. They've accepted it, that it is a part of the economy. So even the uptake of things like M-Pesa there and so on are very good. So we think that system will give us an edge over our competitors. And coupled with that, obviously, as we develop our data, there are opportunities for us to increase efficiencies, to grow, to personalize our products better using AI.
So maybe let's give an example, because then our customers will find this very useful. Let's use my glasses or the phone as an example. Let's say my glasses are worth, call it $300.
Yeah.
That much? Really?
Well, that's just one lens.
Okay, all right.
It's just an example. Suppose my glasses are worth $300.
Yeah.
What sort of premiums am I paying per month or per annum?
Okay, so this is the thing with insurance. Insurance is not as expensive as people think. Personal effects are a lot more expensive because they are all risk in nature. So for $300 glasses, it would cost you quite a bit, maybe $75, but for the year.
For the year,
yeah.
Okay.
I can see a lot of bottles here that cost a lot more than that.
Okay.
But some of the basic things that we expect people to insure, like houses, are very cheap, 0.1% of the value of the house. So if it's $100,000 house, $100 for the year. So
$100.
I think,
okay.
Yeah. So I think people don't.
Okay. So let's contextualize it. Let's contextualize it. For $100,000 house, you're saying $100 for the year.
$100 for the year, yes.
And for my glasses, it's $75 for the year. Is it possible that if I don't use the $75, I can claim it is some of it? I can say, you know what, I've been a good guy. You know, I've kept my glasses well. You guys, you know, the way you valued the risk, You say this is a risky because it's a personal item, so that the risk was high. But I've gone for 2-3 years. I've gone my phone. I've had my phone for more than 5 years. Surely I'm a good guy.
You really shouldn't say that out loud, but anyway.
No, for the insurance guy, it's something I can boast. For the insurance guy, that I've had my phone. It doesn't have a cover. It doesn't have anything. I don't have a screen, but I've never. I'm sober, so it's perfectly fine, and it works perfectly fine. But surely, if I come to you as an insurance man, surely it should be lower. My premium should be lower. Or if they're not, I should be able to claim some sort of savings.
Or you should get a refund or a bonus for being a good guy.
No. Absolutely. So I think two things. So the price that I gave you is obviously a rough estimate, but basically it's suited to your risk profile. So all those things are considered. If you're a driver, do you drink? What kind of car do you drive? And how long have you been driving? Have you had accidents in the past?
Well, you're not supposed to drink and drive.
Okay, I'm not going to go there. So those are considered. But yes, certainly what you're talking about is a good product idea, a cashback. Because to be honest, it's expensive for us to process claims. We would rather you don't claim, and then we give you part of the of.
So can this happen?
Back.
Is it possible for it to happen?
It's possible to happen, but I'll tell you why it has been difficult in Zimbabwe. So in Zimbabwe, because of I would say affordability and maybe the competitiveness of the market, I think that it has been difficult for insurers to price according to the risk profile. So you'll find that any insurance company you go is around the pricing has tended to be at a certain level, which is not ideal because it means that some good risks are subsidizing some bad risks. But as we develop our data further, we'll be able to do that. But for you as Tinashe, it means that as NicozDiamond, we have to do more for you to absolutely want to insure with NicozDiamond and no one else. Because if the switching costs are low, you're just going to say, if you guys charge me this, I'm just going to go to the next guy. And I can tell you the level of disloyalty to brands in this market is huge. The guy will just buy his next third party at the next.
Well, as a customer, let me help you with your market research, which is something that I actually did as a student. The minute you guys have cashback, I think you will capture a big component of the market, because then it becomes a savings product.
Precisely, yeah.
And I know that I'm being rewarded for good behavior. For good behavior.
Yeah.
We need a reward for good behavior. Okay. And I'm sure the actuaries or whoever is pricing this.
Well,
let's have
we are in US dollars.
Yeah. I think that for the most part, the informal sector trades in US dollars. But you were quite right that they're very sensitive to pricing and they're very sensitive to their money. Yeah. But if they know that I'm actually saving.
Yes.
That I don't need to lose my glasses. I don't need to be reckless with my phone because at the end of the year, if I haven't done anything, instead of the $75, I get $10 back. I get $20 back.
No.
And the greater the good behavior, the greater I'm actually rewarded. Yeah.
No, that is certainly part of what is in the works. I think
so we'll see that
when I come back next year. No, not in the next 5 years. We are already putting together a rewards platform because you need good tech to run this. Otherwise, it's going to be abused and so on. But it works. I have no doubt about that because we have a lot. So
NicozDiamond is working on this.
Is working on that, certainly, yes.
Okay, all right. I think that would be very exciting for the market, and it's something that we would love to see. Okay, and then what else? Tell us about you as the CEO. What's that like, especially for an insurance company and just generally as a leader? What do you think has put you in good stead more than anyone else? I mean, you've had a very interesting history and career. Okay. And you're very clear about what you see and what you want. And where are you now in that journey?
Yeah, so like you said, it's an ongoing journey. I think we, as a leader, you need to be clear about where you're going, what your plans are, and also plan for your exit. I think we have seen a lot of people suffering in Zimbabwe in our industry because they were not prepared for when that time came. So when you're in this job, you have to be clear about what you need to do in the next 5 years and what you need to achieve before you leave. I think I've been helped in that I've been seconded to different projects, and I've also worked with very good managers, people who saw in me what I didn't see in myself. So it has helped. I think when you are there, you need to be grounded. One of the biggest attribute, I think, for a leader, particularly in Zimbabwe, where you are dealing with a lot, is to have courage. Because if you now are in there, and we see a lot of things that can frighten you in general insurance. You're just driving, having a good day, in a good mood, and then you see one of your clients' factory up in smoke. So it's important for you not to panic. Yeah. So it's important for you not to panic. And I think that there is a lot of value in this business for credibility. And also, it's important to understand the business. I think one of the things that has happened in the insurance industry is that a lot of people maybe are overweight in marketing and so on, but this is a technical business. You really need to know how your business model works, and you need the discipline, especially to say no, because it's very easy to run a short-term insurance company. You just go into one line of business, and then the claims just come in 10 times the premium that you have collected. So you need that discipline, and you need a good team. I think NicozDiamond has always been blessed to have very good professionals. My job is a lot easier because in insurance you are working with professionals. So I think it's really to tell a good story to them, explain to them what you are trying to achieve, and they can catch on. It's unlike in industry where there's lots of different levels that you have to deal with, and then you have to deal with yourself. I think for me, I find that your personal management is very important, especially in an environment like this. You have to be sane when you come to the office. You have to be balanced, and after a hard day, you have to make sure that you don't take what has happened in the office back home. So as Rufaro would know, running helps, and we are runners. You run, you think things through, you clarify them. There's a lot more clarity, and then you act. Because it also, as you scale, it also becomes very lonely. There are very few people that you can talk to who see things the way that you see. So it's a number of things that you have to.
What do you think of the talent that's actually coming out of our universities? So considering, when you came out of university 35 years ago, and what's actually coming now, what are you seeing?
Okay,
35. I'm not sure, but
you're being a bit unkind there.
But anyway, I think that there's been when we went to NAST, I think NAST rose to the challenge, because the idea from Professor Makurane's view was that it was responding to what was coming from the industry, to say we need specific degrees for specific disciplines and for specific industries. So when we came into the insurance industry, and that's why it has been very easy to absorb the insurance graduates, most of the insurance graduates then into the South Africa, for example. I know that when BEE was hot, we've got a lot of big Zimbabweans in big positions in the South African insurance market. I think most of the guys looking after Africa are Zimbabweans, and I think we've done a lot, black and white. But now, what happened, in my view, is that there was I don't know where the pressure came from, but then there was mass production now of the students. So the graduates that are coming out now, you have to do a lot more work with them to show them the ropes. I certainly think that the quality has been affected a little bit, and it's surprising, because those are graduates that are going in there with 20 points, 25 points. So I don't know if they are being.
So what's missing? Is it the universities themselves, or just a generational thing?
I think there's a generational things in terms of how people, generational perspective in terms of how people view life, in terms of how much they are willing to put out there to get things done. I think there's been a shift there. We see it with the younger people. They need a lot more encouragement. We got in there, and we tried to get the job done as best as we could. If things failed, it was not out of a lack of trying. But now you've got people who are coming in, they are half committed. Someone will be late for their own interview, and they want, and they want a job. So it never used to happen. So there's that aspect. But I think that there's also constraints in terms of resources. I don't know how much our lecturers are paid, but I doubt that they are motivated. So you now have schemes.
So they're not impacting.
They're not only are they not impacting, but when you don't pay someone, then they find a way to pay themselves because the bills don't go away.
Okay, so
now maybe some of the people who have passed have not really passed. There's some people maybe getting. I don't know what is happening there, but certainly I feel that the quality of the student that is coming out of these universities has been watered down somewhat.
And this thing that's trending today, AI, and the insurance sector is very numbers rich. It's very, there's all this logic and rules, and so just for the sake of curiosity and our audience, over the next 5-10 years, what kind of impact do you think AI is going to have on your sector, and how are you guys positioned for that?
Okay, so I think that it will have a big impact. I already said that we could be more efficient. I think in other markets where this has been tried, costs have gone down. We can personalize our products more, particularly generative AI, because now we've got more data about what Tinashe
and his glasses.
We can tailor make the product much better, and we've got real time. So the engine or the AI is updating. So what we thought we knew, because one of the things that has happened, particularly with natural catastrophes and the advent of and climate change, is that the historic data is no longer as good a predictor of what will happen in the future. When we started working, a cyclone was a proper catastrophe in Mozambique. It would happen. It maybe happen in 5 years. Now you can have 3 cyclones in one season.
Is that why people have shied away? Insurance companies?
Yeah. So insurance
from agriculture.
Yeah, but you still need solutions for that. And so I think AI brings a new perspective of how we can at least try to transfer a part of that risk. I think when I look at Zimbabwe in particular, I think that we have been our own worst enemies. We have been reckless with the way that we have organized and collected our data. And that data is key for it's the fuel for good AI models. So I think it's something that we are improving. We are getting to know that we can't leave any data out. It is an asset in its own right. So at the Insurance Council of Zimbabwe now, for instance, under the Zimbabwe Insurance Crimes Bureau, we've already started using a platform where we dump all the data that we are allowed to share, and then AI is helping us flag potential fraudsters, potential patterns that we should look at, claims that we should send for investigation, and so on. So we are on the way there, but I think that our data and the systems that we have been using, the legacy systems, will be a problem, an Achilles for us.
Okay, and just for fun, what are the more incredulous claims you've come across in the insurance that you're like, oh my gosh?
Yeah, so it's I don't know if I can think about something off the top of my head, but so it's I don't know that they are incredible. Sometimes there are things that have happened, but certainly outside the scope of what is within the boundaries
of insurance. I remember there's someone who came to us and said that the tires of his car had been bitten by a dog.
Not flashed.
or something. And I think when we investigated and find out where he had spent the night, we get a clear up of what had happened.
Was it the wife or the girlfriend?
So yeah, we get all sorts of things, and even from a fraud perspective, someone says my car I veered off the road, the car overturned and so on. You ask them when this happened, you get there and you ask the people, the villagers around, they tell you nothing of that sort ever happened. We just woke up and this wreck was here and it was bent. So because this is something that's happening next to your house, you would expect that they had something, and but the people do that and then they torch, particularly with US dollar. People try everything to try and get their hands on USD.
Interesting. And then art insurance. Do you think that there's value in Zim, in insuring our art? And do you guys actually do any art insurance?
I don't know. I don't know if we have the skills, but these are things that if we can get a valuation.
Do you own art that is worth insuring, Tinashe?
It's not about me, but I think that in Zimbabwe you'll find that there's quite a bit of art. Because some of our artwork now it's selling over 100,000, 200,000.
Local artists?
Local artists.
Okay, we're in the wrong profession.
Yeah, for sure.
Yeah. Well, I asked this because I had an interesting conversation with a young man who was telling me that the big problem that they're finding in the art is where do you store this art? Because it's worth so much. But the guy lives in Bari.
Oof. Okay.
Right. So where does he put up his art? And they were trying to find an insurance product, and that's all.
There's some dissonance there. But, if you own a piece of art that's worth 100,000 and you live in Zimbabwe, there's a little bit of dissonance that.
It happens. It happens. It happens.
Yeah. So with insurance, it's about the value at risk. You have to find people who are competent to appraise and value them properly. And then obviously because when the underwriting, like I said, is a discipline. You have to take on risks where it's fortuitous for that claim to actually happen. So if you're in a situation where someone is bringing $100,000 art and then they are staying in some of the places you have mentioned, that's a red flag. It's unlikely that there are a lot of insurers, because there will be minimum risk management standards that are required. But the good thing about the insurance industry now is that a lot of risks that may not be in the mainstay of what we do, we can still insure them, and then we find cover for them, because that is what Lloyd's is about, actually, specialist insurers. And then if we can pay the premium out there, get approval from the regulator, it can be organized.
Okay. Well, that was fantastic. NicozDiamond at 60. Well done.
Congratulations.
Congratulations.
Yeah. And we wish your business another 60 years of great success.
Thank you, gentlemen.
Well, more than 60 years. But I think it's now part of our fabric in Zimbabwe. Yeah. So well done to that. And well done for just actually taking on the mantle and continuing.
Thank you very much. And thank you very much. You guys are doing a good job. I think you allow your audience. This is probably one of the few programs that is listened by serious people. So the panelists are drunk, but sober people are.
Well, then you've had it first. No, thank you very much. And to our sober audience, thank you very much for watching, and thank you very much for being.
And to those having a drink, cheers.
Cheers.